Ladies and gentlemen, boys and girls, we're going to go over Netflix. Netflix announced a 10-to-1 stock split. I'm going to explain what that means and what it means to you, why I'm kind of interested in it right now. But again, let's break it all down. I'm going to cover this first. Usually in my live streams, I'll cover the dollar, the S&P, the NASDAQ, Grandpa Dow, the Russell. We'll cover Bitcoin, and I cover some of the other major tickers and things that I'm doing. But for those that maybe are new to the market, saw this and thought, what is a stock split? What does that actually mean? And how should I be looking at it? Right now, price action wise, you can see the markets or the people. We bounced right out of this zone. This is where we expected to find some buyers, and they showed up. Coincidence or not. So they announced a 10-to-1 stock split. This will be effective November 17th. So let's just draw that out so everyone has a reminder. I'll do a vertical line. Let's go Monday, November 17th. Where's the beginning of Monday? All right, so that's the end of Friday. Okay, so right there, basically, if you had one share of Netflix, imagine that's one whole pizza. Someone's going to come over and cut it into 10 slices. You have $1,100 into Netflix before and after. Friday at close, if stock did nothing and went sideways, you would have $1,124 flat in Netflix. Come Monday morning, if nothing changed, you will have $1,124 in Netflix. It will just say 10 shares instead of one. Now, if you had 10 shares right now, Friday as of close, Monday you'll have 100, which does open it up a little bit more to the options chain. It's the only thing that makes it appealing, because right now Netflix, it's an $1,100 stock. So we got next week, this is a weekly, next week's call option, $765 for at the money. So that's a lot to gamble for some. Once it starts to get really up there, things start to get less and less. It's your buyers and sellers. This is all it does. The only thing it does is it creates more buyers. More buyers because it lowers the what's the word I'm looking for? The entry level. The level at which someone can enter. A lot of people just don't realize that they can have $1,100, whether it's one share, 10 shares, or fractional share. But if I was interested in an options chain and I need 100 shares, I need the collateral to buy 100 shares, be it a sold put, I want to sell a covered call. If we're getting into that, now it's going to get a lot cheaper. In fact, 10 times cheaper. So again, look at the options chain. I'll only need 10 shares. 10 shares come Monday morning will be 100, and now that opens up everything. So you'll need 10,000 instead of 100,000. And now you can sell cash secured puts. You'll be able to buy shares. I don't condone it. You do you know your own risk. But if you don't have enough cash to sell the put, but you do have enough cash and margin to buy 100 shares and start selling calls against it, this just opens up another popular stock. Now, when I first started YouTube a long time, this was 2017, there were two stocks that I talked about that had a cult following. It was Tesla and Netflix. Netflix is a very popular one. And just looking at the overall chart, maybe you missed out. Maybe you're feeling a little bit of that FOMO action. Netflix does a lot of just making money. Here is so there's the 2021. We sucked all the money out. Here's the Rona crash. Right here. This little blip, this tiny little thing right here. That was the Rona crash. That was a crash that set records. I mean, markets were just lock limit down. Things were crazy. It's just right there. Then it went up. 2021, Powell said, I'm turning the vacuum. I'm going to invert the vacuum. We're going to suck all that money out. Got it all out. And then Netflix just said, yeah, whatever. Absolutely sent it. So this right now, I got to be honest, looks like a decent dip buy regardless. So a lot of people will buy into this, front running that split because they know, hey, a lot of people that wanted to wait for it to get cheaper. Now there are opportunities to get it cheaper. So it's kind of like same mentality when something joins the S&P. They know that there might be an influx of buyers coming in, so they're hoping to front run it now, sell to those buyers later. I'm going to be one of those buyers. I do like Netflix. I just don't trade it that often because not very capital efficient when it comes to things. Now, we've seen things really suck. If you've been following me for a while, back in the day, so Amazon was $3,500 a share. That was one share. Same with Google, $3,500. Now, an options contract on that was $16,000. On average, if I was going to buy one call, that's what it cost me, $16,000 per call option. And it was absolutely amazing. I played it like clockwork. And then they split. So Amazon split. Did they split twice? Is it 15 to 1, 10 to 1? Anyway, same thing. And then all of a sudden, it evaporated. It just, the liquidity just wasn't there. The following just wasn't there. The movement wasn't there, which certainly could happen to Netflix. But right now, overall, why this one sets itself up pretty nice is the overall dip buy in a trend up. This isn't really a knife catch. This is a dip buy right now. So you have that going for you. So you also have a positive catalyst, which some will see as a positive catalyst. I'll be honest, a stock split is literally pointless. It does nothing. Literally nothing other than what I'm explaining to you right now. But again, you just have another set of buyers coming in. Buyers equals green candles. Sellers equals red candles. It's literally this whole game. But this is unique because it is a dip buy, not announcing a stock split somewhere way up here. It's like, not really a good deal. I like the dip buy, and I like the ability that every 10 shares I have now will turn into 100 later. So I don't mind it. I might even grab 20 or 30 shares now just to sell calls against later. It does make it a lot better, I think. Netflix IV sucks right now. That's not always. Now, a lot of things suck as it goes down. That IV and that volatility changes as it does skyrocket. Netflix can have some volatile moves, which will pump that up. I have traded Netflix, not recently, but I've traded Netflix enough to know how it works, and this could actually be a decent one to add to your radar. On top of things, there's just some things, and I'm having this conversation with my group right now, specifically over two tickers. One's Adobe, one's UPS. We'll get to those charts in a second. But if you look at this chart, why I'm so successful is because first of all, I don't care for all the stupid stuff out there. There's a lot of content creators that, first of all, I live off the information that I give you. I don't make YouTube money. I make stock money. And I'm not talking bad, but, meet Kevin, Jeremy from Financial Education, Tom Nash. Take their YouTube money away and they would need something else. They're not living off their stock information. So there's a lot of content that they just have to make, and it's a lot of noise. Delete all that because it doesn't actually matter. And you just buy the things that go up. Not tremendously up like pump and dumps. That's stupid. There's a fine line in the middle where it goes from the lower left to the upper right. I buy those things. I like those because then my account does this. In fact, this looks a whole lot like my account. So anyway, if we're sticking to that, I do like the dip buy right here. And then what I like to do is I like for my money to make more money. So I'll buy the dip, probably sell some calls on it later. More interested in that to capture the growth right now than I am anything else. If you want to join, Casey's posting the school link. Now, school is another community. Get you in there. You can buy the course, which gets you access to the Patreon and gets you everything else. And to make that clear, you can just do the Patreon. That's the monthly thing. You get access to the chat. There's two levels, right? You can just get all my plays and my charts. You can get all that and the chat, the live streams every night. Or you go to school, which has the course content and all that as well. So not to confuse you, both those are there. I got to say, right now, the last couple of years, 4 years actually, I've made about 150%. And this year is cutting it close. This year's definitely cutting it close. Granted, we had a crash in March. We called that out the year before. I should have been able to play that better. But I post everything that I do. So there's been 5 losses in the last 2 years. But this year, we got 2 months left to make it to the triple digits. We got about 20-something% left to make it to 100% in the account, which I got to say the last 2 years, I'm feeling pretty bullish. If you want to take advantage of that, all I'm saying, you can do it now or just be part of the people who watch the videos later and wish you did. Anyway, I'm just going to say right here, I'm finishing this year at least 100%. I got to keep at least the triple. I like the 150% record, but I'll settle for at least hundreds of percent every year. That's the ultimate goal for everyone else that has been following me for a while. That is the goal, by the way. I talked about it being red in October. Moving on to the markets, we had a little bit of red. that was about it. We're going to get to the stream. Anyway, my goal right now, what I am striving 100% to do, is get to the 100% mark by the end of this year. Jube says, nice profits. This has been my best year, 220%. Nice at the moment. Mine too. Thanks, Don. Oh, of course. Now, what I don't do is call-outs. Now, what I do is I post everything that I do in real time. Now, if your analysis is very similar to mine and you agree, our numbers are going to look very similar. It's odd, but apparently everyone in my group's paying attention because their numbers, they look like mine. Well, at least the ones that are paying attention. Anyway, Wisdom says, course is worth it. It is, but I guess, yeah, everyone should ask. If you're curious about the course and all that, ask the people in the comments. Don't ask. You can ask me, but of course I'm going to say yes. Ask the people that are in your shoes. All right, let's just jump into the regular stream. That was 10 minutes of Netflix. If you are just joining right now, 10-1 Netflix. It is effective November 17th. I'll show you the screenshot of that real quick. We got the vertical line. So dip buy, zone buy if you bought today. Right here, this Friday be the last day you have one share at $1,100. Come Monday, it'll be 10 shares at $1,100. Hopefully more like 12. So anyway, or let me explain this. Sometimes this happens. You buy the absolute peak, the stock goes down, and you stop out. One of these days, Netflix might do that. It might even be now. But until it does, that's literally the worst case that could ever happen to me is I buy the dip and then it goes to here and I tag out. There's a reason why in the last 2 years there's been 5 losses, and that's it. Just keep it simple. There's a lot of content out there. I named some big names earlier. A lot of investors like to make trading content, label it as investing, and then say traders don't make money. There's a lot of garbage out there. I'll put it that way. A lot of noise. For the new people out there, if it goes from the lower left to the upper right, it makes money. You know what doesn't? This. I mean, this is up. This is a call out in the group right now. But here, let me talk about this right here. If you don't know what you're doing, and you're going to buy a stock that looks like this, chances are you're probably going to fail. Because you think it's on sale. This is called catching a knife. There's a difference. This is going to be a standalone video. This is called a dip buy. Understand the difference? Buying the dip, catching the knife. Okay? You're both buying red candles. One's just trending down. You're like, this is the spot. This is where it's going to turn around. I know all those years prior it's done nothing but sell off, but this is it. Anyway, congrats to, I'll shout him out, Jake. Jake for buying down here. Absolutely sent it on earnings. Rejected there. Held right there. If you're feeling any FOMO, I guess I'd buy right here. My stop would be 92.85. Hang on a second. Let's see. Anyway. All right. Let's rock and roll. I would not get that. Too many big red candles. Yeah, but if you were watching the nightly live streams, this was a conversation we had earlier. I love it when everything pans out like this, because there's two options. It turns around or it gets delisted. Now, that's going to be the case with everything you watch. From all the YouTubers you watch, your Uber driver, the guy on Facebook you randomly saw, the guy you're standing behind in line somewhere. I've gotten stock advice while standing at the checkout at Home Depot. Yeah, you can get it everywhere. The outcomes of these particular tickers, sometimes dividend stocks will just kind of stay sideways forever. By the time they announce a dividend, they're basically saying, we're done growing. This is it. Please stay. Here's a little bit of money. If you just don't, head to the door. But all these other stocks that aren't kind of at that realm, they're trying their best. They go down and get delisted, or they stay alive. They go up. Just remember, there's been over 100,000 stocks in existence. There's over 6,000 right now on the market. Every one of them have all heard stocks only go up. It's about time in, not timing. Just stupid. They've all heard the dumb excuses. And then they just get delisted. In fact, if there were only 100,000 stocks, 94,000 of them have heard that and been delisted. So there's a 94% chance you have no idea what you're doing. You're going to pick the wrong stock, and it's going to go down. But a lot of times those YouTubers will tell you, you just got to believe. And I don't know if part 2 is you just got to believe harder. I don't know what makes something go up like that. But anyway, if you want real advice and someone that sounds really cocky doing it, this is the channel. I get I'm not for everybody. Dollar still going up. US dollar, Japanese yen. I'm just going to have to go along this thing. I haven't taken a Forex play in a while. Bitcoin. Also got a dip down here at this zone. Now, I do like the last time we left this zone, because this right here, lower high. Okay? We finally made it to this other yellow zone. Yellow to yellow. That's what I like. That's what my trades, that's what I'm hoping happens every time. I trail things, so if it doesn't happen, I either make a few bucks or I make a few more. The fact that we made it all the way to this yellow zone, then all the way back down, tells me now the bulls were at least there. Bears are still here. But what I'm curious now about is more of the horizontal pattern. Do we hold here for a while? And if we look at it just from right here, and you don't want to be, you want to be very careful cherry picking data like this. But sellers here, buyers here. And until that changes, it's horizontal until not. So buying the dip here, call it 107. If you're going to trade it and take profit, around that 115 area. I personally am bullish. All right, looking at the S&P. So there was a gap up right here. You guys saw that from Sunday's live stream. I talked about this being a zone just because, well, I know more about price action. Just kidding. I'm trying not to be cocky. I'll get there. So we gapped into here. Found some sellers. That was where the gap opened us. That's where this line 1 came from. And then I noticed we were kind of really hanging out. Sellers here, sellers here, sellers here. Kind of broke the ice. When you finally first see that wick outside the zone, to me that's like standing on a frozen pond and you start to hear some cracking noises. It's not the best sound if you're standing on the ice. It's a really good sound if you're underneath it, though. Anyway, so we got that breakup. And that's where these two lines came from. And if we came over here, or if we do come over here, we see the buyers here, tried to get below, which looks very much like a manipulative, sometimes I talk, manipulative sell-off, then right back up. You can say earnings saved the day, whatever you want, but right back up. So ultimately, and this is what these zones are, areas of attention. Why do I care about these? Because somebody else does. And I don't care if they're making content. I don't care if they are Goldman Sachs. All I know is their money is speaking to me right at these levels. So that's why I care about them. Jumping into where the sellers are now, they are up here. So what I got to say is the markets were pretty bullish. I think the markets needed this. All it did was cool off. And if you don't know what you're talking about, there's I call it the really stupid indicator, the RSI. And there you go. RSI, overbought. Look how overbought we are. And then we just pull off. All we do is kind of stay sideways. Look how far we are. Let's go right back to here. Same price, whichever one you want. Pick from these levels. Overbought. We go over here at the exact same level. We're not so overbought anymore. Right? So that's not a divergence. That's a gearing up. We're cooling off the indicators. The EMAs are catching up. For the people that have 30,000 lines on their charts, they got EMAs stretched out like a slinky. You ever just taken a slinky, stretched it out? If your EMAs look like that, we're a little overbought. The RSI could say overbought. But when we go sideways, we pull over or we pull back, everything kind of contracts, breathes a little bit. The bulls, they catch their breath, get a little sip of water. We're ready for the next move, which is why I would just remain bullish. There's no reason to short this. If you think it's frothy, I'm sure there's a place for you on Twitter. Go short. I'll just worry about it when the red candles start to stack up. You know, when there's a red candle followed by another red candle, then I'll worry about it. Poetry out of JD. Oh gosh, what did he say? He'll make you cry, but your wallet fat, and I'm fine with that. I believe it or not, if you guys think this is cocky or bad, there's a much less filter inside the group where I don't have to kind of worry about the feelers of some of the softer ones out there. Again, not for everybody. I don't have a directional bias. I have an income bias, and those that are in my group better be on the same track. So here's that magic line we drew on Sunday. I call it magic because if you don't know what you're talking about, just magically rejected there. It's wild. Tomorrow's probably not going to break that. It's going to be the same. Here's the NASDAQ. Kind of the same story. Had a little bit of a sell-off. Didn't quite make it down to that zone. That would have been a dip buy for me. Honestly, I would have bought the dip down there. I did, however, buy the dip right here. It's up. I will say that. So I bought the dip right here. And then it was red. And I was annoyed. But I did wait. Once it became a wick, I did add on. So I'm currently in ES long. I'm long 2 contracts on this. So feeling better now. But this felt annoying to me earlier. It's like, you mother. I hate buying things. I hate when I buy the dip and I'm early and you just got to like wait. I guess I could be wrong, you know, and eventually I would tag out. But do you ever just have a wasted day because you buy the dip? It's like, it just wasn't done yet. If you like fat wallets and fat tears, join the Patreon. At least you can use dollar bills to wipe your tears. So anyway, that's the story of why I didn't buy the NASDAQ contract. Just didn't quite make it. As far as the expected move, there's that magic line. So we got above it, sorry. Now this is the rein it back in play, where they pull it back in. Now Amazon saved the day. They had earnings today. So did Apple. Now they're above. They went 2 standard deviations and came back down, which is interesting. Now, if this sticks, what I would watch out for tomorrow, the lesser likely of the plays is that there's delta hedging involved. Market makers need to start doing some work, and then we ended up, Qs are up here at 645, 644. Now, I'm long, so I hope this happens. I would just make a bunch of money if it did. More than likely, 80%, this is a number, this is not a real statistic. This is just me making it up in my head. I put this disclaimer every time. Just from me trading this, when I watch the weekly expected move, 80% chance we're going to rein this thing back in. 20% chance we absolutely send it. Market makers get involved. And again, if you don't know this, inside this range right here, it's you, market movers, institutions, things like that. Get out here. Now market makers are involved because they're not delta neutral anymore. So they're either going to rein that thing back in because they're lazy, or they got to turn some algos on. Make some things happen. And then you see this vacuum up here. So while it sounds small, like 20%, what are the chances? If you don't have the right amount of risk, let's say you are short this market and you don't have a stop, that's going to be one of the most painful days because it won't just grind its way up. And it might, but there's a good chance it just sends it. Because that's just a lot of FOMO. Market makers positioning themselves, buying more shares for the things you bought calls on, which then leads more people to buy more calls, and you just get this endless feedback loop that really can cause some momentum up. So that's the dangers when we get outside here. Same to the downside is things could just rock and roll. So that's the one that you should be on the lookout for. This is the time I would consider 0 days. I hate 0 days. They're great for people that want to give me money because I do like to sell options. But this opportunity right here is where you buy a QQQ 640 call because it's cheap. And if it sends it, you make some money on this. This is a roulette trade. You're going to go up to the table and you're going to pick that number, and then the dealer's going to spin that ball. There's different ball weights. There's different wheel speeds. There's a lot of things that can just be random at that time. And make sure you don't hit that number. If you do, it pays off big. I wouldn't waste a bunch of money on it. But I have seen weird people do that. Anyway, Grandpa Dow gapped up, tried to get above, came back down. Nothing but sellers right here, so we'll need to keep an eye on that. Right now, kind of just horizontal. I'd say dip buy right there. If I was buying Dow futures contracts, I'd put my stop right below these red wicks. Nothing as far as the expected move other than it just jumped up, hit the magic line, pulled back. And in case you forgot or was curious, it did it again, and then it pulled back. Now, you don't have to join the group to see these. You just have to hit the subscribe button and be here Sunday when I draw these out and I tell you everything. Anyway, Russell. Do I need to buy this dip? I trade the Russell probably 4 times a year. And the part that really annoyed me was here's that market sell-off. You guys remember this because you thought it was going to be a flash crash. I even saw somebody call that a flash crash, which is hilarious. Now, everything else is like recovering. Russell's at all-time highs. Like, what are you doing? You take some pre-workout? You're supposed to take 1 scoop, not 1 container. What happened? Now I feel like we're going for the higher high. I might buy a Russell contract and hang on for a bit. I bought QQQ long calls yesterday for January 20th, 2025. 2025-6. Either you bought the longest leap in absolute history, or maybe it's a typo. Oh, 2026? Okay. Weird things happen on Halloween. That's true. Tomorrow is Halloween. IWM. IWM looks like a dip buy. If you guys thought this looks familiar, yes, it's true. Netflix is a small cap stock. It's they're an up and comer. They're in the Russell. They run the Russell. Put that in Wall Street Bets. Make sure it's a quote from me. I just want to fit in. Let's see. Join the group to wipe tears with monies. All right, I guess we can cover Amazon real quick. So tomorrow we'll just be up a whole lot. So for everyone that is in my group, we do have a December 17th, 2020 call. It's going to be up. So it's going to be up a whole bunch tomorrow. Now I'm going to lock that in. I'm still bullish, but I think we could probably reposition or buy the dip later. So tomorrow morning, you can wait for my alert. But I gotta be honest, I usually, when it comes to, if an earnings blows up like this, I sell it to the nearest nerd at the bid, right? It's a market sell. I'm not trying to limit this. And first of all, if you do a limit order on your Amazon contract tomorrow and it doesn't fill, I'm not answering your question at night. What should I do? Make up your mind. You want to sell it or you don't, right? Because if you do some stupid limit order, I used to get a million of these. So I'm trying to make it very clear. I do not want your question and I despise it. Right? You want to jack around with a limit order. It may or may not. You might find a buyer, you might not. Market orders make things happen. This is what I'm going to do. Tomorrow morning, sell it. Period. It's going to take 2 minutes for the options contracts to kind of get rolling, and then it's gone. Again, it's the 220 strike call. So we have the 220. We bought it down here. So congrats to everybody that agreed on my play. You're just going to be up thousands. Now it's $30 real money, so $32 real money plus the time value left of December. So it should be a great play. You're well over 100%. You'd be foolish not to do it. Hang on, what's the latest close? We got December. It's December 19th. Sorry, I said 17th. Amazon 220. All right, so it looks like it closed at 28 bucks. What we got to do? We got to add $32 onto it, so we need to look at the 190s. Okay, so tomorrow it'll probably be around $3,600 for that contract. Now, fact check me. You can just look at your little options calculator and be super confused. So, yeah, I'll sell it for $3,600. We'll call it a day. Use that capital to buy some TSLL. Wait, what? So just set an order to close. It closes at the open. It's crazy. It's almost like you knew. You just signed in. Anyway. Yeah, there's technician. It's the 19th. I know I said 17th. I'm sorry. What did we buy that for? We've had this thing forever. I feel like it, at least. I'm so tired of the questions too over this contract. Are we gonna sell it? It's up $600. You know who I'm talking about. You know who I'm talking to. Hang on, let's get that out of the way. Just so you guys aren't just looking at a blank screen while I'm here. All right. These are all the, you can turn on, if you don't know, by the way, if you are new, you can turn on the notification just for this. I don't tag everybody. I tag the notify growth. So you can get notified just for my plays alone. They're not doing everything. 15. I know we bought it for 15. Lisa, in case you think I was talking about you, that was actually a technician. Do we know what day we bought it on? Okay, so Robinhood options calculator are not correct when it comes to after earnings play. How much will the 240 December 19th be worth now? Go to the 240 and just look at the 210. If it's up $30, just go up $30 on the in the options world, and that should be a pretty close. September 25th. Thank you. So it wasn't that long ago. Okay, so we bought the December 19th Amazon 220 strike call. I got it for $14. So tomorrow we'll sell it for $36. Dang. That was almost 200%. That would have been cool. Anyway, if you just do the Patreon, the cheapest one, that's what you get. It's just that. And all my charts. So anyway, shout out to everybody on that. Again, going to lock that in the morning. You know what we could do with that? I might just buy $3,000 worth of Bitcoin and move it to our new wallet. A little cold storage. Get that out of sight, out of mind. Some of that is... Hang on. I know what we're doing. We're buying the dip. The Beto dip. So for everyone, this is a Beto futures ETF. I don't know if I'm doing this for sure yet, but I kind of want to. Let's see. What is the... Does it have the dividend date? Ex-dividend date, October 1st. No, I guess this is the next one. The ex-dividend date is this... Well, this Monday. So everything you own of Beto come Friday at close will be accounted for Monday at open. So if you want the dividend, because it pays a monthly dividend, if you do want that, you do have to have the shares this Friday at close. They'll do the accounting Monday morning. You can't buy it Monday morning. You can't buy it Sunday night in the 24-hour market. You do have to have it before Friday's close at 5 Central Time. I don't know how much it's going to be, though. Has anyone... 75 cents last time, 86 cents, $1.20, 77 cents. So around there. I might just buy some of that. We're gonna buy that. I'm probably taking the profits and putting it into that. Is that weird? Yeah, you could buy iBit, but one, I have cold storage. So I've been buying Bitcoin and then transferring it to cold storage so it's offline, just so nothing can happen. It can never get hacked or anything. Also, it's out of sight, out of mind. But two, it doesn't pay the dividend. It doesn't pay the dividend that this will. So if Bitcoin bounces here, here's iBit. It's just like that. So if you have a Roth IRA, you don't know what a wallet is, or you're confused, you can buy iBit, and it's buying shares that are going to track Bitcoin. If you don't want to get all technical about it. There are some IRAs that don't allow you to buy crypto, so this would be a good avenue for you. You can't pull it off into cold storage like I can, although I don't know if anyone's ever hacked your account and transferred shares, so I think that's going to be okay. You can never PayPal somebody shares either like I can with Bitcoin. December usually gives 2 dividends on Beto. Yeah, and then there's one that's not in January. I don't know if we know the... Let's see, changes from month to month. Do we know the I don't think it's said yet. Let's see. I'm on Market Chameleon. See what it says. I don't think it says the amount yet. Your guess is as good as mine. I've seen 99 cents. I've seen 76 cents per share. So I might do that, and then hang on. Might just be good timing for the profits. Get a little extra situation. All right, we covered all the markets. Let's cover Apple, which is weird. Why did Apple go up? Apple can just shut up. It's an AI ticker. It's one that I am buying. If you haven't been following me for a while, I'm casting an AI net, buying a lot of AI stuff. I have been for a while. It's worked out pretty well. Apple just annoys me. I'm an Apple person. I have so much Apple stuff, but their stock annoys me. I can't put my finger on it. But it looks like they did good numbers-wise, right? Their guidance was good. Estimated $1.77. They made $1.85. Let's see. Revenue estimated $102 billion. They made $102 billion. Talk about some tight tolerances. Whew. That was close. It's close to being a red number. A few million for Apple. That's nothing. Very interesting. The other option is I buy Beto or I buy TSLL with the profits. Now, I could grab 100 shares right here, keep some money, call it a day. Actually, with the profits I made, I could get my money back and have 100 free shares of TSLL. Now, I could buy it at $20.50, right where it's at right now. And here's the awesome part about TSLL. I can buy it at $20.50. I can sell next week's options contracts. Let's do the $21.50. Someone's going to pay $67 for it. So that's $100 per share that I would gain, plus another $67 on top of that. 67 cents per share times 100. So if TSLL bounced, went to $21.50, and I just let it go, I'd make $167 just for nothing. But if it goes to $21.49, I keep the $67, I keep my shares, and then I do it again next week. And I do it over and over again. If I sell the 30 deltas, that's still $48. So I actually take the profits from Amazon, buy TSLL. Right now, this one is an absolute gold mine as far as premium goes. An absolute gold mine. This thing's unreal. If I bought it at $20.50, sold at $22.50, it's an extra $48, $200 on the shares that I would gain, but also it would be another weekly income. I would turn that money into income. TSLL, make your own dividend. Oh, I know, I make a lot of it too. If you're new here and you don't know anything about options, either buy the course or just ignore everything I just said. That's not a sales pitch. It's just don't get yourself in trouble. Options are very awesome if you know what you're doing. And I can tell you right now, there's a lot of YouTube content out there, and I would say 99% of it is garbage, probably wrong, and enough to get you in trouble. Full stop. And I don't think you'd be able to discern the difference. Now, whether it's a sales pitch or not, this is how I make money literally every week. And if you do this full time and you don't have a job or anything else, supplementing it, plays like this are how you pay the bills and how you can have weekly income. So that's what I mean by I could take the profits from Amazon. I bought it for 14, sold it for 36. I spend $2,000 on here on shares right now. That leaves me with $1,600. One, like I never took the play and I just had a random $200 show up in my account and 100 shares of TSLL. Not a bad play. If you ever want to be in those, Casey shared the link. She's my admin. A whole bunch. If you ever do want to join, the cool thing about Sundays and Thursdays is we're doing Zoom right after this. So I do have to get to that. It is time. I'm going to wrap it up. I'll make another video tomorrow talking about what I did with Amazon and why you should have joined a long time ago. Just kidding. I do got to wrap it up here. Hopefully everything I said helps. If not, ask questions. I will answer it in the next video. Have a good one.